Hello, and thank you for listening to Renewables, a podcast by BioStar, which aims to explore the current and future energy landscape in America.
Hello, everyone. Welcome back to Renewables. Thank you for tuning in this week. We have Mark Riedy with us this week, who is a partner at Kilpatrick Townsend in Washington, D.C., and the chair of the Energy and Projects Finance practice at Kilpatrick Townsend. Very impressive career in the energy industry. Really excited to dig into both past and present. Mark, thank you for being here.
Thanks a lot, David, for inviting me. Look forward to our conversation.
Yeah, it's you have such an interesting background, and we kind of chatted a little bit before this, and there's some really interesting topics in here that I want to get to. But let's start, set the stage a little bit for our viewers and listeners. Tell us a little about your background and your 40 plus career in the energy industry, and sort of how you got to where you are today.
Sure. So, David, and your audience, I'm a 45-year private placement and project finance lawyer, international in scope, in the energy, chemicals, and infrastructure areas. Internationally, I've worked in over 65 countries, and I lived in Asia for over 8 years, more than 6 in India and more than 2 in China, and worked throughout the entire Asia space. But throughout my career, I've worked on every continent, and then domestically, I work with every facet of renewable and conventional energy, chemicals, and then infrastructure.
That's great. It's pretty impressive. 65 countries you've worked in or done work in. That's really impressive. And 40 plus career, and really kind of a front row seat in the energy industry. And so I guess talk to us a little bit just about, kind of the waves of renewables and what you see both a little bit in the past, but also today. How do you see things related to renewables and the importance of renewables and growth of renewables in today's context?
Well, maybe I should start that by going back a little bit and, go back to where a lot of this began. It really started germinating around the uh, uh, PURPA statute, the Public Utilities and Regulatory Policies Act in 1978, which opened up the renewable power industry, or actually the power industry, to more renewable powers, and particularly cogeneration. So solar and wind were just coming into being then in
Mm-hmm.
commercial context, as was biopower, geothermal, and the like. And as a result of that, in 1979, um, a little bit earlier, the biofuels industry got going with generally was corn ethanol. And in 1979, I was one of the founders and for 6 years the general counsel of the Renewable Fuels Association. And then coming up to the more recently in 2001, um, I was one of the 5 founders, and for 18 years, the general counsel of the American Council on Renewable Energy. So,
Wow.
as you know, RFA was and still is leading association on the biofuel side, and particularly the liquid biofuel side. And now
Sure.
this has morphed to gaseous biofuels in other associations. And then ACOR, the American Council on Renewable Energy, represents all things renewable power,
Hmm.
and both domestically and internationally. So, with respect to your question, I think the renewable energy industries broadly, electricity and fuels, uh, are growing tremendously, uh, despite um, the emphasis in the current administration on fossil energy.
Mm-hmm.
Uh, we can see that this is where things have been for many years now with renewables, and they're only getting larger. And the job creation out of these industries is really what's going to propel the energy industries of the future.
Yeah. Absolutely. You're seeing a lot of job creation come out of these businesses. And I want to stay international for just a minute. Do you feel there's a leader? Is the United States the leader of this energy transition internationally? Or are there other countries from your experience around the world where perhaps there's more leadership with the transition or they're doing it at a faster pace?
Uh, I guess that can be answered multiple ways. The U.S. certainly has a role. It's been in either a leadership role or a secondary role to China. Uh, but then a lot of the technologies have been developing over the years out of Europe.
Mm-hmm.
And the EU is a very, very strong player on developing these technologies. If you want to look on the electricity side, China is probably leading on solar and wind as
Mm-hmm.
they try to ramp down on their coal-fired power plants, although those are still being built over there.
Sure.
In Europe, we're seeing a lot of the technologies that are developing what are very popular in the United States and trends, the sustainable aviation fuels, the renewable diesel, the renewable natural gas, and the renewable hydrogen markets. Those technologies come out of Europe quite a bit. Now,
Mm-hmm.
they might get uh, integrated better in the United States. So the United States, as I see it, has been kind of the place to uh, ramp up a first commercial technology because we have a lot of programs that will accept the technology risk at the government level, both government financing with loan guarantees or at the state level with, if you're in the bioeconomy, with tax exempt municipal solid waste bonds.
Mm-hmm.
And those have
So you,
helped germinate these industries.
Sure, yeah, the financing obviously important, and you've built a career around that. You mentioned sustainable aviation fuel, which I think is fascinating. You also mentioned, some U.S. kind of the government loan products, which I want to get to in just a second. But let's stay on the aviation fuel for a minute because I think that's really fascinating. Obviously, air travel has become such a staple of our society. Pre-COVID, you're seeing a lot of people, making one meeting business trips, on an airplane or two flights to go and have one or two meetings and coming back. And perhaps, the pandemic changes that temporarily or more longer term, perhaps not. But tell us about your work in the sustainable aviation fuel, where that industry is going and how fast.
So I got involved in this industry for sustainable aviation fuel probably 10 to 15 years ago and drafted and negotiated the first contracts. They generally came out of the um, freight carrying space for aviation, but extremely important because if you look at transportation fuels generally, your largest market in the world is aviation fuel
Hmm.
generally. Your next largest market is marine fuel.
Yeah.
And your third is vehicular transportation fuel. So you can see that this is large. To date, there's only in the range of 20 to 50 million gallons that are in production with a pre-COVID consumption internationally in commercial, freight, and private air, just putting aside military, of 82 billion gallons a year. The
Wow.
projection is in the next 5 years or so, that'll be at about 135 billion gallons a year. Huge jump. And think about the big difference between how much is produced right now. And they're being produced from just a few projects. I've been involved in the financing on 5 of them that are either in construction or in production and are producing these fuels. But I represent currently probably 75% of the world's sustainable aviation fuel developers as they're building out portfolios of these projects. So these are still very early days, but the potential, as you can see, is huge.
What is the waste stream or the feedstock that makes that fuel product? What is it and what makes it sustainable?
So that's driven by the ASTM, the standards, and you have to get a pathway. So you've got to get your feedstock qualified and then your fuel qualified. And so to date, it's been things like the fogs, the waste oils, fats, oils, greases, things like that, wood, woody biomass of all types, the organics of municipal solid waste, when you MRF out the organics from the total waste stream and then turn that into the final product. That's big. And then another one is alcohol to jet, and that's through different ways to do it. Now, there's lots of new pathways that are being developed, which will require modifications of or an expansion of the feedstocks that can be used. And then a lot of it is also driven, will be even more so driven by the kind of regulatory incentives you can get to help you in the financing and ultimately the marketing of the fuel and the rate of return to your investors, and to be sure that your lenders get paid their debt service.
Interesting. And you mentioned earlier, sort of government-backed products that can help make these projects feasible. Are there USD or DOE? Do they play in that sustainable aviation fuel space? Do they have products you can use? And then, I guess more broadly, just talk a little bit about how important USDA and DOE loan products are to these markets.
So again, you're talking mainly, David, about first commercial technologies here. So you've got to look at where those programs are. So at USDA, you have a program called the 9003 program. It's an integrated biorefinery program. It can deal with biofuels generally, biochemicals or renewable chemicals generally, and bio-based products. And now newly, although it's been there for a while, it's now actually expressed into the new rule, biopower. And so jet fuel can fit in there, but there's a $250 million senior debt limit. So you won't be able to build the significantly large project, but we have used it and will continue to use it to move these projects along. The Department of Energy has a bigger program called the 1703. And if you're in a renewable space in it versus an advanced fossil, you can get $4.5 billion. There's up to $4.5 billion available. Clean fossil has $8.5 billion, and it's uncapped. So as long as you can go in with a request as high as you want, as long as the money's in place, and so that money's still in place. But you got to pay fees to the government as you go, which we're dealing with right now. We're trying to address that through Congress and the DOE and the White House to modify the program to make it work better. And At USDA, you're still up against that funding limit of 250 million. Your other way to do it would be with a bond finance. And so the waste products set up perfectly for it. And the institutional market is more accepting of technology risk than a commercial bank is.
Sure.
So, but still, you've got to protect against a technology risk. So when we do that, we wrap those projects with a technology risk insurance policy that I helped develop with an investment banker 12 years ago with AIG, and now it's morphed around to a lot of different A to AA rated insurance companies. So you're getting both a protection on the technology risk. So if you got a hiccup in the technology, it'll pay out the debt service. And it credit enhances, like a loan guarantee would, the debt. So you can reduce it sometimes 100 basis points. So you're already at a lower finance with a tax exempt finance, but you can bring it down lower with this type of a policy with a single A to a double A insurance company standing behind it.
Wow.
Those are the advantages of these programs, because you're dealing with the technology risk, and you got to get through the first commercial project. Then you could start building a portfolio. And as long as they're working for about a year, then the banks will come in and start looking at it differently.
Sure. Well, you're sort of not me directly, but preaching to the choir to BioStar. We have a waste to energy process, and our largest commercial operation is being built right now. And we've, certainly for 10 plus years been struggling to, bring the right mix of capital to those projects, because they're very expensive, and there is technology risk, as you mentioned. So you mentioned the insurance policies. That's really interesting, and you've brought a lot of different solutions into the marketplace and to your customers to help make projects a reality, frankly. Tell us about some of the others. I know in our previous conversations you had mentioned an LCFS product, a feedstock product, a carbon capture product. So let's we only have so much time. We'll kind of stay at a high level, but let's jump into the LCFS product. And if you don't mind being the teacher here for a moment, explain to our viewers and listeners what the LCFS market is, what that stands for, and a little bit about the marketplace.
So it's found in 3 jurisdictions right now: California, Oregon, and British Columbia up in Canada.
Now, did I hear correctly that some legislation got passed this morning in, was it Minnesota or?
Could be. I mean, I'll move to that. But first of all, the low carbon fuel standard is LCFS, and and in California, where it's the strongest regulatory incentive for liquid and gaseous biofuels, and for the use of them in electric vehicles. Also, a lot of people forget about that. That's your strongest market. And so there's other states. The state of Washington's been trying to get this through. Nebraska, Iowa, South Dakota, and Minnesota. Now, I hadn't heard that Minnesota had passed it, but it's active legislation. It also is in New York and in Massachusetts. So New York is a large driving public up there, just like California. So and then your biggest potential here is Canada, with what they call, it's modeled after the low carbon fuel standard. It's called a clean fuel standard. And it's taken a while to get it up and going, but on June 1st of 2022, liquid fuel will be eligible for it. And on June 1st, 2023, gaseous fuel will be eligible for it across all of the provinces.
Wow.
So then that begins expanding the market exponentially.
Very interesting. So you are literally creating low carbon fuel and selling it into this market, which is generating credits that are paid back to you. Is that fair and accurate?
You're doing is a CI score that gets you your best value. That's a carbon intensity score. And the lower you can get it, the higher value you will get from the California Air Resources Board, CARB, that manages it, and subsequently in these other states too, in their respect.
Interesting. So I build my gas project or my low carbon fuel project, and there's a Clean Air Resources Board, CARB, that basically scores my project and tells me what my CI score is, and then that ultimately determines how much credit back I get.
Well, what you generally do, there's 4 or 5 major companies out there that will do your scoring. And then others will do the auditing of that for CARB. And then CARB will certify it. They'll go through their own scoring and certify it. Now, going back to the insurance side, the important thing is to be sure these things keep in place. So we are developing with insurance carriers a regulatory risk protection policy that would, it has its beginnings in the political risk insurance that you can see from what used to be called the Overseas Private Investment Corporation, now the Development Finance Corporation, and the Multilateral Investment Guarantee Agency, the former being out of the US, the latter being a bank, insurance company out of the World Bank for international projects, both of them. And these insurance protect against political risk insurance. Similarly, this is a risk insurance regulatory in focus, and we're trying to protect both the RENs, the Renewable Fuels Standard, and the LCFS, and then on top of that, the RECs, the Renewable Energy Certificates that are available for the electricity market. So the whole idea is to keep the value in place so that if there's any government inroads, California is California, and regardless of a Democrat or Republican administration or legislature, it's pretty much going to stay in place. The danger there is that it doesn't get extended beyond 2030, but there are bills to extend it to 2035. On the RFS side, the danger is there are built into the law that came in 2005, the ability to get exceptions. And a state could get one, or refiners could get them, and they're called small refiner exceptions. And they came about in the Obama administration, actually, with refineries up in Philadelphia. And they've morphed. And right now, then there's been so the price tanked on the RINs when all of these were issued. And then they went up again when the 10th Circuit ruled against 3 of them in Washington state area. And so that still has to go before the Supreme Court. So it hasn't done so yet. And but the RIN price is up, but the whole idea is to protect the value of these because they're so important, because these projects are big. They have a higher capex, capital cost per gallon on the liquid side, or per MMBTU on the gaseous side, or per kg on a renewable hydrogen side. And so you need to you need these incentives because as much as we try to keep a client focused on keeping their debt service payments in their base price, whether it's the rack price on a liquid fuel or a Henry Hub price on a gaseous fuel, it's hard to do that. And so you need to have these protections in place because when you look at the contracts, particularly the refinery contracts, because they're the obligated parties, they're going to have these regulatory out provisions. And that means that if something would happen where there's a material inroad into the LCFS or the REN, or they were knocked out completely, then you've got generally up to 60 days for the parties to come together and restructure the transaction, or the off-taker can exit and terminate the agreement, which then puts the developer in a covenant default on its loans, and they've got a problem.
Sure. So what I think you're saying at a really high level,
The value there.
right, at the highest level, what you're saying is whether it's a REC or a RIN or an LCFS credit, that's helping finance the deal. And if something happened from a regulatory or a new law was passed, 4 or 5 years into the future, you could blow up your financing structure. Is that oversimplifying it? Okay, yeah.
That's correct. And so if you're going to rely between the two of those, the state credit or the federal credit, particularly since the lion's share of this right now is a California market, the LCFS is going to be the best one to rely on just because California is California. It's not going to probably get knocked out. So, then it becomes the fine tuning on the contracts to be sure you get the best value as a seller so that you have the most revenue to be sure your debt service is timely paid and you've got a rate of return to provide to your investors.
Sure. Well, it's fascinating stuff. It's obviously really complex stuff. And so, in the event that there are developers out there who might be looking for partners and help, structuring these types of transactions, obviously Mark could be a resource for you. I want to get into one more topic here before we wrap up. We're coming sort of close to the end of the time here, but you mentioned solar, wind, geothermal, and fossil fuels. And I think our listeners would be interested to know from your perspective. You told me you had just closed a really large transaction on some oil wells in Canada, I believe. What does the future hold for oil? What do you see this market doing in the next 5, 10, 15 years?
Well, the oil industry isn't just going to, in a snap of the fingers, disappear overnight. In our lifetime, our kids' lifetime, I see it continuing. We will still have the internal combustion engines and the need for these fuels. They will transition. I mean, we're going through that transitioning process. And if you look back, where we had, wood fueled ships, then steam ships, then oil fired ships. And then as we're, if you look at it kind of like that, we're in that kind of a transition. And what'll be interesting is the way this election is coming out, where it seems to be that Vice President Biden will become the president, and the Senate will stay Republican, and the House is Democrat, and you're gonna, but it's all tightened up. So it's going to be interesting that they're all going to have to work together, but certainly this administration is going to be focused on incenting the development of renewable energy. Maybe not to the exclusion, but to the reduction of fossil energy. But there's still a play for these fossil industries, and but the most significant growth in the near term to the long term is going to be in the renewable space.
Yeah. And for everyone who's viewing, we are recording this on Thursday, November 5th. So the final outcome of the presidential election has not yet been called. But as Mark mentioned, it certainly looks like I've been following the betting odds are certainly in favor of the former vice president right now. And it's interesting. We're seeing the market react in a really positive way to potential gridlock in DC. So since we're on politics, you pretty much answered the question, but you see an avenue here for like the extension of the federal solar tax credit and other incentive markets that are set to start expiring, winding down, or expiring?
Absolutely. I would think that you'll see some kind of a stimulus. You've seen the stimulus in
Right.
the last year really focusing on getting people stabilized while they've been on furlough or job loss. It's getting people back to work and keeping business going.
Yeah.
I think as we get that settled, we get the a vaccine and this all calms down, we're going to see the stimulus going towards the renewable space, and the natural thing would be to extend the tax incentives and maybe create some new ones. We haven't
Sure.
in the biorefinery business, we haven't had an ITC like the electricity industry has, an investment tax credit, since the 1978 and 80 tax acts that put them in place, 10% for energy and 15% for infrastructure, which I helped put those in place. And then they were sunsetted in 1986. And the electricity industries, starting with solar, were able to get the ITC and then a production tax credit. And then the biofuels got the production tax credit, but not ever have we gotten the investment tax credit for the CapEx side, building the projects, a 30% type of incentive. I think that could become a reality. Certainly the gaseous fuels are fighting for it with a 30% anaerobic digester tax credit and a 30% nutrient recovery tax credit, which right now are in bills on the House side, which nothing's going to happen in this lame duck session on these bills that are there for energy to extend incentives. Incentives could be extended through an appropriations bill, but I think they'll be looked at quickly in the next Congress, and I think we'll see extensions, and I think we're going to see some creativity, like a standalone energy storage tax credit, which the industry has been fighting for, which would be 30%. So not just integrating into a solar installation, but standing on its own or integrating into the grid for resiliency. And I think you're going to see many other types of incentives. And I think keeping these government programs in place is very critical. And I've helped create off the side of my law firm a group called the Alternative Fuels and Chemicals Coalition, which focuses on keeping all of the grant, loan, and loan guarantee money in place throughout the federal government. And we've identified over 55 of these programs that these industries in the bioeconomy greatly rely on. And then also in the electricity industries rely on it to other extents. And so I think those are going to be, you're going to see expansions of that, and the programs are going to be made more workable.
Wow. Well, it'll certainly be fascinating to watch. We are definitely, keeping our finger on the pulse of those various programs you mentioned. We've covered a lot today. I really appreciate your time. We've also talked about a lot of different trade organizations. So I'm going to make sure that my team has in our show notes some links to where people can go and find these various organizations that you've helped start and make what they are today. Mark, before we sign off here, is there any way, how can our listeners and followers follow you online or find you online? I want to make sure that we tell them that, and then we will sign off after what's been a really great conversation. And I can tell you, we haven't even scratched the surface. We've stayed at a high level, and it's just really neat to talk with you. You're so incredibly knowledgeable on all these topics, and you've been a great resource for our team. Certainly could be a great resource for some of our listeners and viewers. How can they find you online? And then we'll sign it off.
Well, you can reach me on my LinkedIn, which just use my name, Mark J.
Yep.
Riedy. You can get me if you want to reach out to me, because I've got multiplicity of slide decks that lay out all of the mechanisms, programs, and structures that we use to get these projects successfully funded at mreedy@kilpatricktownsend.com. You can call me at my mobile number 703-201-6677, and we could schedule a call or text me on that, and look up on our website at www.kilpatricktownsend.com and look at our energy team. I head it up, and we work in a multiplicity of different types of projects and private placements and tax structures. And so, that's how you can locate me. And again, if you want to schedule another time to talk in different financing topics or equity topics, kind of the trends we're seeing out there, I'd certainly be glad to come back and discuss it with your audience.
I will take you up on that, because we really did just sort of scratch the surface today, but it was a great conversation. And we look forward to having you back on the show. Mark Riedy with Kilpatrick Townsend, thank you so much for being here today, and have a good rest of your week, sir.
Thank you very much, David.
Take care.
Bye-bye.